Good morning, everyone. Welcome to the Euro Trader. I'm your host, Marcus D. We're going to be looking at what metals and energies are doing. But before we start, make sure to familiarize yourself with the risk disclaimer that Bruno just posted. I'm still crunching some levels here. And in my analysis, copper has room down to 550. But I'm just going to use the updated levels, because what is in my view at the moment is levels from last week. And even though some days those levels don't change, we're still having quite a bit of movement. Although in copper it's not as much movement as we are seeing in silver. Silver is going crazy again, so caution there. Let me just get rid of some stuff here. This is the old LME anchored VWAP, so that's gotta go. Now this is a former air pocket from like forever ago, and it seems to be reactive. That's interesting. Right now we're seeing London open and going higher on both of these. And that sometimes means that they can sell it. Now, I did one trade for Asia. The first one was made when we went lower, and then I scalped it a little bit to the upside. Didn't want to hold it too long overnight for hours and hours because of the amount of volatility that we have, and I was only in with 1 micro as well. And I also did a second trade again on copper very early this morning because I woke up pretty early. So I saw that we wicked below what was the former Asia low, which was here, and then did that classic liquidity grab followed by a good reversal. So that was the second micro trade. That's where this comes from. And now we're going to sit on our hands for a bit. Expanded ranges are in force, but at the moment the ADR low was kind of reacted with a bit of an overshoot. ADR low on copper was 563.65. There we go. So we reclaimed that, wicked below Asia low, reclaimed the ADR, and then went back to VWAP. So very interesting. Now we've got to wait, because usually what tends to happen by about 60% of the time is if the first hour of London is up, they typically take it down. There is a caveat though. If the first 2 bars on a 30-minute time frame are the same color, then that setup is not that great, which is why I'm not in a short right now. And at the moment I don't have any levels there. So we shall see. We shall see what they want to do with this today. It's going to be another interesting day, I think, especially on silver. Everything's kicking up. Right, so 590 remains like sort of a moderate call area. 6 evens, yet again, is a bigger area. So the 6 evens has been in play now forever, it seems. And it also represents a gamma flip from the options chain on the monthlies. However, there's a lot of calls there as well, so it's a bit of a mega call wall. Still. And 590, moderate. Still an area of interest, but still moderate. And 550 remains the big boy support here, so. Still have that range. 6 evens, still 550. That could come into play today. And now we're just kind of middle of nowhere. So we'll see what they're going to do. Okay, let me grab some silver data. Even though we're not going to trade it, I know that some of you are still trading it, but just be careful because it's going crazy. It's already down like 3,000 ticks on the day. That's not normal. And we need to make sure that we don't get stuck in any kind of circuit breakers. Because that can happen. Doesn't matter whether you're on a sim or not. If CME stops the data coming through because a circuit breaker kicked off, you're going to be stuck in a position. And stops are not respected. They're not guaranteed anyway. But if there's a circuit breaker and then they open up at a random spot, that is where a stop is going to be taken. So, you know, blown up combines, everything. I'm only doing copper because I can scale down to 1 micro. So even if it jumps however many ticks in case of a circuit breaker event, it's still not going to massively harm me. We have Astrid saying, yes, I agree. Yes, very dangerous, silver. I don't know whether you can hear, I think I have a noise gate. A nose gate. Alright, so I'm just crunching numbers. MS. That's cool, D. Yeah, no reason to forcibly print gray hair in here. Yeah, God knows I've got enough of those already. And then we're going to do the same for gold, even though gold is in a precarious position too. Already moved 4,800 ticks on the day. Pretty crazy. We live in some historic times here. You don't see this every day. This is like a black swan event. And I do love the volatility, but you know, there is a matter of account balance to consider. Because if you have if you have the circuit breakers, then it can get ugly. Very ugly. We don't want to do that. Now, if you don't know about circuit breakers, they operate on... It's basically when the movement is so massive that the exchange decides to halt the trading. And in the markets, it's like in the metals in particular, the circuit breakers are working on a rolling 30-minute time frame, right? So if something goes over a certain percentage in those 30 minutes, that's the only time that they would kick it. But if it moves a lot, but it's across a number of hours, then no circuit breakers, which is why you get these like insane moves. And while that is opportunity, that is also risk. Especially on prop accounts, because most people are either in new XFAs or in combines, and they're just not equipped to handle that. JD VL says 30 to 60 minutes. No, it's 30 minutes. Generally for I mean they might have changed it, but usually it's 30 minutes. So let me check actually. Let me check on the CME. Oh yeah, they changed it to 60 minutes. Interesting. Used to be 30 minutes. When did they change that? Yeah, so we have 7%, 13%, and 20% price limits. Is that for... That's the equities, yeah. So if something happens in equities, they run on a percentage based, but commodities is the rolling 60-minute period. I don't know when that changed. Again, I don't read CME every single day. But it used to be a 30-minute rolling period. Now it's 60. Why? Nobody knows. Right, let's grab these silver levels now. Silver levels. Find the gamma flips and all of that. Wow, okay. I mean, a lot of bunched up levels. Right, so if we fall back down below 80, there's probably not going to be smooth movement because we have levels that are kicking in almost every dollar. If we stay above, then we could expect a slightly calmer rally, but again, calm in this kind of volatility is an oxymoron. I may have to grab the entire chain because I grabbed like 50 strikes up and down. I don't think that's enough. But yeah, we have levels from 76, 77, 79, 78, 80, 80, 50 for some reason. Don't see that a lot. So yeah, let me grab the entire chain, and that's gonna be a little bit better. Because with the volatility, we don't know how much they're gonna move it. This may take a while. You know what? I'm not going to do this now because if something happens, because I managed to lock up my AI platform, trying to crunch like a big file, and if that locks up, I don't really want to have to deal with that this morning. I saw the question about DAX. Did I do any DAX trades? Not today, not yet. That's not to say but I won't do any later. It's just at the moment it's going above the initial balance, exceeding ADR and ASR. That was exceeded at 24,657. So that was the ASR high on DAX. And I don't like going into breakout trades like this on DAX because typically it pulls back to the initial balance at least 50%, and sometimes even fails the entire auction. Now today, the initial bounce size is pretty big. So that could mean a strange day when they just keep going up and up. But yeah, maybe long from VWAP or somewhere. However, prices last week, because I haven't crunched that data yet, I'm going to do that after the stream. There was a pretty big level at 24,323. During Asia, that seems to have been the stopping point. And then another big level, which was a put wall, bizarrely, was at that 24,625. So not too far from the average session range high, exhaustion point. So if they manage to kind of roll back to the initial bounce, maybe we have some further longs, or maybe there's potential for some kind of a failed auction, maybe a partial failed auction. But yeah, breakouts when DAX looks like this, they're a little tricky. Because, you know, you have statistical ranges exceeded. We have some supply coming up here, but it's not really an originating supply, so really the interest is all the way up here. What's going on in the weekly? Weekly time frame so far has a wick down. We're still in range on the monthly chart. So yeah, not really grabbing me, to be honest. Not going, hey, trade me, because I don't see any high probability events that are currently happening. So, and Randy, so the time for DAX is anytime from 9:30 a.m. GMT, so basically when I start this stream, which is what this stream was supposed to be. But sometimes the high probability setup won't happen until 11 a.m. So yeah. Randy says, I watched you for the hairstyle. Do I have a hairstyle? Really? I don't really do much to my hair. Like, I just wash it, and then however it comes out, it comes out. I don't have time to deal with it, and this hair is actually from last night, so I just put it up in a high ponytail, and I slept on it, so there's some sleep in this hairstyle. Drops Homestead says, I'm over 60, my circuit breaker is like whatever. Oh god, that's funny. Mario says, hey Dee, good morning. On Friday's dump, was there any circuit breaker activated when it was from 1118 to 75? I don't think so. I did not, like, I didn't watch the entire day. I actually had to take my Cavalier back to London for a checkup, so I ended up only looking at the markets very, very late. I didn't come back until 10 past 7 p.m. in the evening because it was rain, it was flooding, and it just took forever to come back. But yeah, so I don't think there was any circuit breakers activated at all. Randy says, DAX contract is huge. DAX has minis, micros, and the full DAX. Full DAX is expensive. It's as expensive as silver. So it's like, silver is $25 per tick. DAX is 25 euros per tick. But then you have the mini, which is 5 euros per tick, and you have the micro, which is actually €1 per tick, making it really, really suitable for smaller accounts, and you can really manage your risk very well across those three options, very well. Whereas silver, the micro is not a true micro, They have the mini silver. I don't think we have it on Topstep though. But even that is pointless because it's like still massive. Yeah, so they only have two silvers. We'll see how long it takes us to get the new nano silver, because they're bringing out a 100-ounce silver contract due to all of the shenanigans that we've seen. But yeah, so far I'm not really seeing too much anywhere yet. Just gonna mark this Asia high, because that might come into play since it's close to 590, but also close to 6 evens because we have expanded volatility. So what's a few ticks between friends, right? 200 ticks. Yeah. Peanuts. See if I can drag out some levels for gold. Drops Homestead. I'm not seeing a trade in silver yet. No, neither am I. We're kind of, again, middle of the middle. We have Asia high up at 88,250. And at the moment, since I didn't drag out all of the chain, I don't see where the levels are, so... I thought 50 strikes is going to be enough for some reason. I don't know why I thought that. Probably because I haven't had enough coffee and then forgot that silver moves 500 in a day. 8050 grabbed my attention for no specific reason. Well, yeah, there's stuff in yeah, it's not often that you see half prices in silver, especially when it's moving this much. So maybe there's something there. We'll find out. But I mean, in this volatility, any area that you're talking about, it really has to be a zone. It can't just be a singular price point because they will overshoot it. So you have to account for the madness and the craziness that we're seeing, and that means expanding. Like I was doing some research on, was it HG? On full copper, just to see, yeah, see, I have these from last week. Mega core magnetic if pullback starts, and it just went straight to that, even on the first smash down. It's just funny how, you know, you have these markers and then you go, what was I looking at there? And then everything just happens exactly like you thought it would. That was a Thursday, wasn't it? Yeah, so I have some research somewhere. I might have deleted it, but it said that it overshoots, I think silver overshoots levels. Just trying to find which chart I was doing that in. That it overshoots levels by 367 ticks on average. Now, on average, here we go. Overshoots gets levels by 367 ticks before reclaim. So that's something that I noticed last week on silver, especially when we reached all-time highs at 120. And I had that 120 level for a while. Now it still overshot it massively and then came back, but it was still the hedging zone. So, you know, you can look at things from the perspective that we have higher volatility, and therefore these levels will be also looking to react. All right, so we have a former ADR So ADR high that has come down as we kept making new lower lows post exhaustion. That's exactly, so let me just show you, that's exactly here, this red line. So sometimes when it overshoots ADR and then reclaims it, then rotates to the opposite side, it could be that stopping point for the London session, even though generally I don't like going counter trend when we have all same direction during the initial balance. But this could be a tiny trade. Tiny trade. Let's see what sort of stop we're working with. Okay, not too bad. So let's just put that as a marker, 82.10. I'm gonna call it ADR high rotation because it's not like, oh, we've exhausted the ADR. We exhausted ADR low, so that was the point that goes static. And then as we rose up, this is now a full exhaustion to the opposite side with the expanded ranges, and we do use the median numbers so that it's not completely skewed by the additional volatility. All right. If you heard something falling, I keep trying to get these towel holders that don't require drilling because I don't want to ruin the wool, but none of them are holding. So one of them just fell. So that's not gonna work. I'm really not having any luck finding towel holders that will stick on the wall. Maybe the walls are too glazed because there's a glaze because it's a bathroom right next door. So, yeah. You heard a noise. That's what it was. All right. So far, there's no committed reversal here, and we have to wait for the reversal before I consider any shorts here. It needs to be fairly decent as well. So right now we have a bit of a range in a 15-minute time frame in copper. The paint is becoming sentient. Yeah. Exactly. So yeah, I think I'm gonna have to resort to drilling some stuff in the wall, and it's very annoying because I really like, since we moved here, there are bits and pieces that are still not quite finished, even though the house is finished. But I think because the family who sold us this place, they kind of got the house up to a certain standard, but then there are things that are missing, like, you know, towel holders and stuff. And yeah, and I'm like, I don't want to ruin the wall, but then I tried like 3 different options and they just won't. These walls just are unstickable, so gonna have to get the drill out, get the power tools out. Randy says you had to screw it in, use anchors or find a stub, never trust double-sided tape. Yeah, that's what I'm learning. I usually, if I'm gonna drill, you know, I don't know how to call them in English, but you know, you have those, I suppose they are stubs, right? You push them into the wall and then it kind of screws in. But yeah, it's just, it needs to be placed at the right area. And then if you get it wrong, then you have to fill the hole, and then you have to like paint over it, and it's like, oh, like we spent 5-6 years doing up our old house, and I want to do as less DIY as possible. Like we have some projects in mind for next year, and the first one will be the sand pit for the doggos, because they all love the sand pit. There is one in the local field where we walk them, and they have one in the doggy school area, and they love it. They're just like, sand pit. We call it the beach. So we decided that they need a sand pit in our backyard. Alright, so silver is kind of making a bit of a megaphone on the 15-minute pattern time frame. No, 5 minutes, sorry, 5 minute. So if I make this a little bigger, so we've made a lower low, but also made a higher high. Actually, let's go to micro silver, because most of you will be trading that. If you trade it at all. You've seen that Topstep has suspended the live accounts for a good reason. And I know some people are like, oh, it's because they didn't want you to make money. No, actually they make money in the live when you make money. Any other payout splits that result from from like XFAs and stuff, that's not real, right? But they want live traders to make money, and if everybody gets stuck in a circuit breaker, that's just risk management for the firm, right? So they have to make sure that they're never in that position. So whilst this whole velocity logic is happening, we don't want people trading in the live markets. I mean, look at the silver micro. Dome is so gappy, so much gap. And then I think gold is pretty disgusting as well. However, copper, little gappy, but not nearly as bad. My accent is weird today. Micro copper, very populated, right? I don't know what micro gold is doing. Yeah, micro gold gappy as well. So the only one that's sane to me today is this micro copper with enough contracts to actually not get stuck anywhere. So, you know, there's a couple of gaps, so it's not like it's super liquid, but it's liquid enough to not have these enormous areas where nobody's trading. That's what causes prices to teleport. So be very careful with silver and gold in particular. But copper, we're kind of just about tradable, right? Gold has gone into a bit of a reversal as well. Maybe we can put 3 here. Maybe we could just watch price action. So I'm not going to trade gold, but we can still watch it for the sentiment, right? Let's go to the 15-minute time frame here too. And typically gold tends to be the leader. Sim accounts are grouped to a trade, they make money. Yeah, but sim accounts don't push the orders onto the exchange. They just match them in-house effectively. So it's still simulating the liquidity, but it's not real liquidity, and neither of those will hit the exchange. So they do make money, but not for the firm, because it never goes out. So it's not real. So, you know. Whereas when you're making money on the actual exchange, that is, you know, the money coming from the actual exchange. How do I manage natural gas? It also has gappy spreads. I think during this time it is a bit weird. But not that weird. So this is not gappy. This is actually pretty populated. So what are you looking at? Because the way I'm seeing this is actually a pretty normal, slightly thinner nat gas because of the time of day. But in general, this is not gappy. The problem with nat gas is that it does weekend gaps, which are pretty severe. And back in the day, before you could trade it properly, as in like overnight, not properly, you could always trade it properly. But if you, let's move some of these out of the way so we can see what the hell is going on. And there's going to be new levels as well. We're at new areas. So the problem with nat gas is if you want to swing trade it, this is the kind of gap that you're looking at after the weekend. So we ended up just above 441, and then it opens 16% down, or minus 708 ticks. So if you were long biased and you decided to hold nat gas into the end of the week for some weird reason, you would get just annihilated. This is massive. So this is the problem with nat gas. And back in the day when the overnights weren't trading, so the regular trading hours were all that you were going to get, this used to happen every day. And it used to be like up 9%, down 15%, up 15%. Like, it just doesn't have any rhyme or reason to the gaps. So it is a volatile product, but intraday it still doesn't have problems with liquidity, right? And nat gas is called the widowmaker for a reason. Now compare this dome, this is gold. We have no contracts anywhere. It looks empty, right? Completely empty with nat gas. Populated, right? Every single price almost has contracts in it. So there's liquidity there. Not as much liquidity because there's still this gap at 3,654 that nobody's interested in for some reason. So that's probably going to get skipped. But it's only one price. It's not like 10, 20, 30 prices of nothing. And therefore, that is why I don't see the problem with nat gas. I've personally never had an issue executing an order during regular trading hours and getting out on nat gas. I've had it in ES during FOMC. I've had it in the metals. I've had it in crude oil, bizarrely, but not nat gas. Literally never had a problem executing anything. So yeah, weekend gaps are a problem for sure. But then again, we're intraday traders. You're not, like, I don't do natural gas options for this reason. Because it's just too unpredictable. And I just don't want to be, in a long call and then lose all of the profits because of a weekend gap. That's just not something I do. But when it comes to crude oil, on the other hand, I prefer to run long calls from the bottom of ranges on the weekly chart, and I will run a naked short as well, just to get everything that I can from the short bias once it reaches up to a certain level. Now let's have a look at crude oil. And sometimes if the level is not high enough, I might do a protective long above the short as well, just to make sure that it doesn't scream to the upside because of whatever. And there are weekend gaps in crude oil as well, but they are minimal. This is like maybe 100 ticks, and when you're in an outright futures trade, that's terrible, right? But if you are in an options trade, there's ways to absorb that, And especially at these levels, like as soon as we get anywhere near sort of 70, let's have a look at the weekly chart. So if we get somewhere in this zone, I will be trying another short. But right now we're sort of middle. I don't deem this area worthy of an options trade, unfortunately. So, yeah. But yeah, we get up to 70s and slightly above. I will be watching how the price behaves and then trying to short call somewhere. And like I said, sometimes I will do a spread just in case there are some fundamental stuff that could push it even higher. But we have been in an area where 75 has been the top since April the 1st, 2024, and we would need something really massive to change. However, for me, this is still a short biased product. However, because of intraday movements only happening properly every once in a blue moon, where it moves 200-300 ticks and then nothing, and it just seduces you into thinking, hey, it's back. And we all miss crude oil, those of us who have done crude oil for a while. We miss how it used to move intraday, and that just doesn't exist anymore. So it's like But options are still very sweet, options for me. So I do long options down here. Why? Because it has a short bias. And if it starts to just melt, which we've seen crude oil do before, and I'm anywhere kind of higher than 50, I don't want the risk. Whereas once we get up to 70 level, I will be eyes open and watching it like a hawk. I actually have an alert on one of the other platforms to tell me when we've hit 70, and then we'll see whether we can do an options trade there. And those can make quite a bit of cash because the theta, the time decay, works in your favor. So it's not just the premium; you also get that time decay. And the short call, when you're writing an option, you really want it to expire worthless, so you cannot let it go higher. It's kind of like a neutral to bearish strategy, I suppose. Because neutral, you're looking to collect the premium mainly, but then if you benefit from that theta decay, then that's pretty sweet. But yeah. Anyways, that's options trading. That's different. Yeah, short call spread. Yeah, maybe. Yeah, exactly. But again, it's too much of a risk. It's a coin flip, right? Like if you're doing options, especially on full crude oil, the way I like to do my spreads is to have like at least $1 or $2 of difference between them. So even because what happens if you're doing the spread, most of the profit will come from the net premium that you received, right? So you don't have too much profit potential. That is what you're going to get, because you pay a premium for one leg, and then you receive premium for the other leg, and then they kind of cancel each other out, and then whatever is left, that is your profit if the price kind of stays contained where you think it should be. But if it doesn't, you're somewhat protected, but you still don't benefit from the full drop, because you still have the other leg that you paid for. So it's like you have to be very careful when you're going to do like market neutral strategies. So yeah, but I wouldn't be doing anything here. I just don't think it's worth it. It's too much of a meh area. And when it comes to options, I do like to use the supply and demand. Nothing too complicated, just to make sure that you're at an extreme area of a swing before you even consider an option. You don't need to be super accurate on the timing. However, having said that, I always execute my options trades towards the end of the day. I will never do it in the beginning of the day, because then you expose yourself to like so much whipsaw intraday, and you end up at a completely different price. But in the evening, you have the whole Asia to make things work in your favor to the opposite side. So let's say that we get all the way up to 70 and then we hang there towards the end of the day. If I do a short call, then I have the whole Asia to kind of take it away from my entry. And then we do need to see London and or NYMEX to take it further. Now, sometimes it will take a day before they make the move, but generally, because this product has been so contained in between 50 and sort of ballpark 70 level, with this extreme run post-COVID, you know, we're not really looking at that. This is an outlier after the futures went negative during COVID, so this was all just a big recovery. But then they settled, right? They settled in a range of an extreme price at 83, and then on this contract, the extreme low was just below 50. So that's your range. But I look at supply and demand, which means that the supply is anything that gave a reaction downwards, and that's my area of interest. So if we are hypothesizing that crude oil will remain within 70 to 50 range, where are your options trades going to be? Well, they're going to be in above 70 and or around 70 and around 50, right? Now 55 can be an option, and same thing with 68. Why? Because there was some market point shift here. So if you notice that whenever we overshoot across 70, this 68.50 on this particular contract tends to be the reversal point. So maybe if they touch it and then we have trouble going higher, that could be an area as well. But again, we're so far away from that. Like, it's almost not even worth discussing. All right, no setup on copper. There is a potential setup on silver because silver is still trying to establish a range. But I'm not going to trade silver, I'm afraid. I'm not going to trade silver. So we can just watch it. But no trading it. Just going to move all of this. So it looks like copper is the stronger one from these two. I would say that silver is the weakest. Why am I saying that? Because look at the previous three candles. Very easy way to look at the correlations. So how are the candles looking? Well, this one is already making a bearish engulfing, right? Popping through the low of the previous two candles. This one, not really doing that. It's halfway into the previous candle and not even touching anywhere near the low. Doesn't mean that it won't maybe catch up to it, but at the moment that's all a bit weird. And gold is somewhere in the middle, so gold is also making a reversal, but silver is definitely leading the way here. And it's probably going to pull the rest of the other two together. I'm guessing platinum is going absolutely insane as well. But yeah, we just have to be super careful today. What's platinum doing? Oh, platinum actually not super crazy. Yeah, platinum, I mean, it still fell 2,760. But it hasn't gone into like 5,000, 6,000. However, copper is still very stable, right? We're working with a 658 tick range today, which to me is actually pretty acceptable. Very acceptable, in fact. Because I like the sweet spot between 300 to 500, but I've traded RBOB when it was like 600, 650. And sure, you need to use wider stops, but yeah. Yeah, $1 is nothing. EMS, it's absolutely nothing in this volatility. 1K on silver tonight, very nice. Again, for me, it's a bit too much risk. Prefer slow and steady. What about GC? Don't touch GC. I mean, it's so gappy. This is untradeable, man. Look at how many prices we have gaps. You can't, like, and then you're gonna be blaming the platform, right? You're gonna be like, you didn't fill me. You can't get a fill even in the sim when they're trying to simulate the lack of liquidity that you have, right? So this is all going to be jumped over. So if you try and execute an order in this gap, you're going to be the only person there, even on the sim. And this is the reason why they stopped live trading, because if you happen to be in, like, you want to get a 47.13, you're not going to get anybody interested in it until 47.10. And then to the upside, I don't know, because we don't have 100 contracts, but it's still extremely difficult to do anything with gappy price action. So for those of you who asked, somebody asked, how does a dome work? So dome is it's just a representation of the resting orders. So they're not orders getting executed. They're just limit orders or stop orders that somebody's placed. Now we have no way of knowing whether they are, new positions or old positions. You can kind of guess it from the context, but you will never know because they don't publish that. So the whole point of the dome is to see whether A, there's liquidity, and B, to see where the bigger players potentially are. Now, that's more difficult on products that only offer you 10 prices up and down, because you can only see the 10 prices here. And right now, 10 prices up and down are just gone in a blink of an eye. So I don't think that the dome is going to be super useful on this particular occasion. I wish that they had, more contracts for the metals up and down, like they do on, for example, crude oil. So if you go to crude oil, you have 100 up and down. So you can actually go up and down the ladder and scan to see that there's a large resting order sitting at 63.60. And then to the downside, there is one at 61.48 and another one at 61. So whether these are orders that will actually get an execution or not, that's again a matter of context. As we get closer to the area of where you see the large order, you can sometimes find that the institutions, or not institutions, but this spoofing going on. And the spoofing is basically entering, putting a limit order somewhere or a stop order without an intention to actually execute it. And that's technically not legal, but very, very difficult to prove in reality. So this is why spoofing will still happen to a degree, because what's to say that you didn't see something in the market generated information that made you change your mind, and as the prices are flying towards your price, you go, yeah, actually I don't want this anymore, and you get out. Was that a spoof, or was it an order that you intended to execute but then you didn't? And that's why it's very difficult to prove. Now, when I did my lecture for my Pro Dev program, I have a lecture on bookmap in there, and I do mention the algo bros from like ES in summer 2024, where we had like two bands. You can see them on bookmap, right? So you had two bands that were just following the price up and down to the tick, and that was a large predatory algorithm. Now they disappeared. However, I think they were like trying to hide liquidity or something. And therefore, if you were not used to seeing the dome and you saw these two kind of sandwiched orders going up and down, you would be thinking as a novice tape reader, well, that's the liquidity, clear as day. But really, they never touched it. They were just like moving with it. And then somehow it disappeared. One day, it just wasn't there, so someone must have clocked on what was going on. So I'm happy that the algo bros have gone away. But yeah, the dome, real-time order flow, and events that happen as we approach a price, they are valuable, but it takes a long time to sort of get an idea of how things play out, and then what is the result, you know, how much room do you have when that event happens. So, you know, there is a guide that I created for my market stalkers in the Pro Dev. But you know, that's like an hour's lecture where I'm only talking about bookmap events. So I'm not going to be doing that here because nobody is interested. Bosco said, what was the point for them to do this sandwich spoofing? To hide real liquidity so that nobody can see where their actual prices are. They have sandwiched orders that are always changing, and then you have the real orders that are hidden in the sandwich somewhere. Therefore, not able to be visible from the retail side of things. And you know, we also have iceberg orders. Now they're on the other end of consideration by the institutions. People think that they're done out of malice. It's like, oh yeah, somebody's like breaking up the large order to small chunks. Well, what would happen if they execute one massive order all at once? They would either crash the market or make it go to the moon, right? They don't want to do that. They know that. So what they do is to partial the order in smaller chunks. Therefore, if you start seeing, like, let's do a little scenario. Let's say that you see this big order at 62.25 on crude oil. And as we're approaching it, it is still there. It is not moving. It's not disappearing. It's not flashing in and out, in and out, in and out. It's there, right? And then as we start getting closer, you notice that there's an execution of 10, 12, 10, 15, 10, 12. Like these orders they keep coming through in smaller chunks as we're approaching 62.25. That is the iceberging of the order, of the one big order. They do that out of consideration, not out of malice. So it's easier to execute a big chunk of the order across a number of prices without affecting the market too much than just smacking in the entire 130 contracts and just not caring what it does to price and how the other participants freak out when that kind of a tape bomb comes in. But yeah, it's that part is not very difficult to see, but you do need, like for me, I have the large lot alert as well. So especially when I see something like this, I will switch on the large lot alert, and then as we get closer, it's going to start giving me pop-ups with the size of the order, and therefore I know that it's an iceberg. So that one is actually, to me, not that difficult to see. Then the other event that you have is the sweeps. So the sweep is very contextual. Sometimes it is a sweep in the opposite direction. Like for example, on GC we had one here, and then eventually it never held, and they reversed it. Now, whenever I see a sweep, I always ask myself, what's going to happen next? I don't rush into it. I just go, all right, so if this is a real reversal, I want to see them actually committing to the opposite side of the story. If they don't, that means that the sweep was in the correct direction, and then you would expect more shorts to step in, more aggressive shorts to step in and to keep making strides lower. Now, this is probably a big time frame to be looking for sweeps. Let's go down to 2 minute. But for example, on gold, let's find the Asia low. Actually, let's have a look at copper, because I think maybe copper is a better, less insane version of it. Yeah, okay, so here is the sweep. So they established the Asia low, 10 minutes before Tokyo ends, right? And then we have this candle that sweeps through the Asia low, okay? That's why they're called sweeps, because it's a sudden movement with increased volume. And they tried to go lower, but then I'm guessing there was some absorption that happened here. And then finally they failed, and they start to reverse it. Momentum comes back in. They take it back into Asia range. A little bit of a reaction, but ultimately fails and keeps going. So where was the starting point of this event? It was the break of Asia low. You very likely had sweep dots on the book map, and then big bubbles fighting, and some of them even managing to go into a lower low, but ultimately the buyers stepped right back in. Somebody absorbed all the selling, and we were also at the time of day when we typically see the take profit move after Tokyo. Now, normally I'm asleep during that time, but it just so happened that I was awake. My cavalier woke me up to go outside, and I was like, let's have a look at what's going on. And that's what was going on. So, popped in a trade. I went to bed. and then I got up and I'm like, oh, target reached. Okay, cool. But yeah, that's basically some basics of tape reading. Drops Homestead says, I could buy 2 houses with the silver and gold I hold. Yeah. Well, I bought one. So, not just from gold, but obviously it's always nice to have. Like, I still have my silver bars. So I have some from when it started breaking out over 45. And I can't remember what, because now the average is all messed up. But it was somewhere around, I don't know, 47 that I bought 5 grand's worth. And then when we hit 71.50, I bought another 5,000 pounds worth. So my average on my silver holdings is still very low. And if it crashes all that much, that's fine. I'm not selling the bars. I'm going to be keeping them. Probably until my retirement. You know, I'm not looking to sell them until I absolutely need to, and until I'm a proper granny. Right, so this copper, what's the time? 10:36. This copper is now starting to base. So let's just see what stop we would need here. Alright, to be safe, I'm probably going to run an 85 tick stop here. I'm going to try and fade this. Only 1 micro though, because I don't want to be smacked in the face. So MHG, 85 ticks, 1 micro short. Okay, let's see if we can get something out of this. Because again, we have this 8-year high rotation. We have the time of day when they like to fail the auctions as well. So the level is kind of there. We have nothing in the options chain. We are in between levels. So that's a little worrying. But the other 2 metals are also turning around. Cavalier is choking. That's just his heart. There's nothing in his throat. Now he's gonna want to go out. Yeah. Every time. Alright, so the risk that I'm using here is gonna be only 106 bucks. I'm not willing to risk anything more. And if we do make it, we're just gonna be adding 212 onto this. And maybe I even take it off at VWAP. I don't know. We'll see. But for now, this is actually looking like a decent setup. I wouldn't say, oh, it's a star setup. Because, you know, at this time of day, Those setups are few and far between. But yeah, this XFA is called London Scalpy for a reason, right? Yeah, paper silver is a joke, especially CME. Yeah, there are paper contracts. It's not representative of true price of anything, really. Hi D, what is the Asia low time, please? I'm getting confused because Shanghai closed at 7 a.m. So I consider Tokyo close to be the one. So I usually use Globex open and then Tokyo close, and that's 6 a.m. GMT. Why? Because when Shanghai is closing, they typically wick below the Tokyo high or low, and then they reverse it. Whereas if I'm taking the 7 a.m. Shanghai close, I very frequently miss the potential sweep that is basically happening as a result of Tokyo Exchange closing. So it's something that is backed by statistics as well. Every time I try to move it to 7 a.m., those stats of the sweep below or above Tokyo, higher or low, they just break down. So there's no edge in the Shanghai closing. And whether that's because you also have Eurex opening at the time, so everything's a bit more messy. I don't know, but I've looked at probably 8 years worth of data on the metals. And whenever I try and move it to 7 a.m. for the sweep either never comes or it's a loser. Whereas the 6 a.m. end of Tokyo, that seems to be the benchmark that frequently gets taken in metals and follows the reversal. Yeah, silver on the CME is in default right now. Don't know what's gonna happen. I did, both me and Hoop said it's going to be, something's gonna break, because that was unsustainable. And again, I'm still bullish in the long run, like we're talking 5, 10 years, 20 years. I'm bullish in silver. Unless we find like another source of silver, like on an asteroid. So Elon goes to, to take us somewhere where we can mine silver. I'm still bullish. The good news says, Deeyana, may I ask you something? I saw Dakota using the same feature for the order flow, the dome. How can you see the orders? Is it a paid feature? Is this not present on the combine? Yeah, it's a level 2 data, which is always an extra subscription. Now, Topstep has it in add-ons in your new dashboard, but it's not being charged by Topstep. They just pass on those fees for level 2 to the CME, but you then get it on the combine. So it is always going to be an extra paid for thing. Look, we are working in the banking sector. Nothing is cheap, right? You have to, like, I have a bit of beef with people who are like, oh yeah, this service is like $50 or $40 extra per month, because I think level 2, Bruno, remind me, is it 49 now? It used to be 39, but then again, inflation and whatever. I think it was, I think it used to be 39 and now it's 49. But don't quote me on that, because I just have it on like a thing that gets charged every month. So I'm not going to be watching price month for month. Oh, do we change by $10? Because I don't care. But it is always an extra thing. So if you're still somebody who's just learning, and you don't want to pay for services like Bookmap, which is $82 a month, Mentor Q, which is again with some discounts, you can probably get it for, $29 to $50 a month on the basic subscription. Level 2 data, $49, 34 something without the VAT. Yeah. So for those of you who are outside of the UK and EU, it's probably about $34. Something similar. But obviously those of us who are in the VAT countries, then there is a VAT charge. But yeah, so if you don't want to pay for extra services and yet you're doing something where you want to change your life, and a lot of you want to make this a full-time career, but you don't want to pay for services, like imagine any other business, right? So let's say you're starting your own shop, right? But you go, well, I don't want to pay for stock. You know what? I'm just going to make my own. It's like, okay. Are you an artist? No. Like if you are an artist, obviously you will make your own stuff. But then again, imagine you're a painter. You don't want to pay for the canvas and paint. There is a thing called cost of sales, right? And in services such as banking, trading, cost of sales is things like charges for the data, charges for, yes, the combine these days, but also charges for, various tools that can help you achieve stuff. Yeah, so depth of market bundle, level 2, $34.25 per calendar month. Ongoing, and it renews on the 1st of the month. So if you are thinking of signing up for level 2 data now would be the good time, because you will get the entire February for that. And it doesn't matter when you sign up. Like let's say you signed up on the 30th of January. That still falls under that's how the CME charges data. It's not nobody else, right? It's not Topstep, it's CME. So if you signed up for the service at on January 31st, they will charge you again on the 1st, because it goes on every 1st of the month. So just keep that in mind. Otherwise, you're going to be stuck with an extra $70 charge, and if that bothers you, obviously be careful, right? Alright, so just reading chat here. Yeah. Topstep has nothing to do with the CME level 2. That's right. They literally just pass the subscription. RDW says it's expensive when you're first starting. It's expensive whenever you're starting, Like if you're starting as an established trader, you will probably need, at the very least, working capital. Like we're talking bare minimum of 50 grand, right? So, and when you're starting out, those costs are probably going to be less. They're not going to be 50 grand, hopefully. They're going to be combines, they're going to be evals, they're going to be, data fees here and there. But they're not going to be, 50 grand up front. Even though people who are novice did blow 50 grand of their own money, putting it in a private account, and then making all the same mistakes that they would make in a combine and an XFA. So just use this for what it is. I do wish that people are more respectful of the XFAs, because I think there's this thing in the back of the mind, you can always reset, you can always start again, it doesn't really matter, it was only $200, it was this. But that mindset is what gets people in trouble. If you just go, do you know what, I've got a budget, this is how much money I'm going to spend on the combines this month. If you blow that budget, you're not allowed to buy more, because that will be breaking your risk management rules. Risk management starts with your personal money management. It doesn't start when you get into a combine or an XFA. And I hear so many people go, but Dee, I will behave myself in an XFA. No, you won't. No, you won't. I promise you, you won't. So behave yourself at the point of purchasing a combine and build those good habits, which then become more natural and less effort, until they are completely effortless, right? But those energy pathways are not going to train themselves if you keep giving them the dopamine fix, if you keep breaking your rules, if you keep buying more combines. It won't sort itself out. You have bigger things to think about. Yeah, so Trade Nico says the value area for copper is very telling. A friend told me every time he sees the charts, I have value areas marked out. value area trading theories really work on copper. They work on most things with a bit of context behind them. But yes, I do agree that the edges in particular of the value area for COMEX, they generally don't give fake signals. It's, I mean, nothing is 100%, obviously, but, you know, if you have setups relating to test of value and a reversal or value acceptance, they will play out incredibly well, but not during this time of day. So COMEX is the session when we have the most volume, and therefore those value areas that were created for COMEX, they are the ones that are kind of anchors. And then I use the rest of my options levels and statistical extremes. And I mean, you've seen me so many times on group coaching. I managed to get my trade or end of fast markets as well. So I am very rarely wrong at that time of day because I have those benchmarks. London has always been a bit tricky for trading for me. DAX is the only exception where I can do pretty well on DAX and I can read it very well. I know exactly when to stay out. Somehow on metals, because it's a lower volume thing, even if I'm right, the lack of movement sometimes messes with my head. So it's not easy. And that's why if I'm going to do like the serious trades, it's either going to be Asia or it's going to be that Asia sweep between 6 a.m. and 8 a.m. So 2 hours before London comes in. If there's no sweep, that's a different story. But generally, London for me is mainly just scalps for this time. It's like if you catch, you know, whatever I'm looking for here. Yeah, even if I catch like 100 ticks, that's like, wow, okay. And that's now with the increased volatility. Normally it would be like, oh, you know, I caught like 45, 50 ticks. Wow. Okay, great. London worked. Next. And it's just the nature of this time of day where the metals don't really have anything going for them. Shanghai is closed. Tokyo's closed. LME not open. COMEX not open. So we have this weird time where there's a lot of randomness going on. And yeah, there are a few events. There's the fix for gold that just went through like 20 minutes ago. And then we have the silver fix that happens at midday. So that's not going to be for another hour and 10 minutes. Copper doesn't really have a fix until later. So they fix prices by looking at VWAP between 12:30 and 12:35, I think, or something like that. It's a weird pricing calculation. So yeah. So yeah, if I grab a few ticks out of this, it'll be like, okay, fine. But I'm not looking to take like 500 ticks like I sometimes do on these setups. Yeah, totally chaotic trading nickels, yeah. Statistically, it's a mess. So statistical relevance, even when those events happen, they're either really short or they are lower odds. So you have an event that happens nearly every day, but it carries a 60% probability. So what is that? If London first hour is up, then the next candle, so on the dot after IB for London is done, it should give you 1.5 R on the other in the other direction. If it's down, same thing rings true. So you basically go long at 9 a.m. And outside of the volatility that we have now, usually I would use a 45 tick stop to get 1.5 R. Now we have to use wider stops because of volatility. And today we had the slight invalidation of the 9 a.m. entry, which is that on a 30-minute time frame, both of the London open candles, which was this one and this one, so these two, were in the same direction. So when I'm going to do a fade immediately at 9, I want to see one of them go up, the other one go down, but overall the first hour is still up, that opens up more potential for the probabilities to play out. And it's only like for the next hour. Sometimes it takes longer, so I do like to leave it, but leaving it, it's like you're sort of doing a do or die. If it's going to happen, it typically happens pretty quickly, so maybe that's something to consider. But again, every time I tried to put an exit, or like more of an early exit to it, in the long run, we're talking like 2, 3, 4 years, that tends to skew the results. So again, you have to marry the good with the bad and just find the middle ground of where you're comfortable. So to me, I'm comfortable with setups that generally have about 53% on at least 1.5 R. So that's like the core probabilities that I look for. And then depending on the day, you know, maybe you'll try a couple of times. Maybe you can extend the target sometimes, but this time of day is just so tricky for any stats to properly play out. Especially on metals. Alien is spiritual awakening. Okay. D, what's a micro 1 tick on gold? It's $1. But because gold at the moment has thousands and thousands of ticks of range, you will still probably need to use 200 or 300 ticks for a stop, which again puts your risk to $200 to $300. Otherwise, you'll be whipped out. And, you know, you have to take in the volatility of the product into consideration when you're coming up with your stop sizes. And if you see, like, let's have a look at 5-minute ATR on gold. Do I have that? I do not. I do have it. Hold on. Why did that not show up? Yeah, so 5 minutes. This is how Coach Paul calculates his stops. I have another way. But ATR, let's do 14 here actually, because that's what he does. I like to use 9, but I use a 30-minute time frame though. So, what is it? So, 5-minute ATR is 265 ticks. He likes to double that for his stop size. Yeah? So 265 times $1 is 265, but then we want to double that because that is the 2 times ATR stop loss. It's Coach Paul's calculation. On 1 micro, with the systematic scaling based on the liquidity and volatility of the product, you're looking at 530 ticks of stop, which is direct equivalent of 1 micro and 530 ticks, $30 of a stop loss. It's a lot on a micro. You know, copper is a little less crazy, but I'm still, like during COMEX, I would never use 85 ticks. That's just crazy. I'm probably looking at 160, 140, 160. But yeah, it's like the volatility is very high, very, very high. And if you don't have some sort of a systematic way of figuring out the new stop in the volatility that we're in right now, I suggest you work on that. And I suggest you come up with a more systematic way of looking at things, because you can't just be married to like one stop size. It has to scale somewhat with the volatility because, you know, for example, copper trades very quietly during the summer. I'm not going to be using 85 ticks and 160 ticks during the summertime. It's more like 30 and 25. And then during normal times, when copper is moving about 200 to 300 ticks a day, That's the time when I use 45 to 55 ticks. And that's where I'm comfortable. That's my sweet spot. Now we're expanding outside of that, but I already know, how products behave in that volatility. So I know ballpark, I have the formula to help me scale my stops to the new liquidity. Jobs Olmstead, it's a good night for me. I hit my goal. You and D, have a good day. Thank you. Have a great day. Yeah. AZ Anthony Trades, hello. Good morning. D, is it mandatory with Topstep to put a stop loss? And can I use a very small top loss? Stop loss on Topstep if my entries are very precise. You can use a small stop, but you cannot use no stop, because if you execute a trade without stops, they're not gonna like that, and it actually breaks the rules of conduct. They don't want to see people trading with mental stops, because that never works. Also, I will tell you from the best intentions that ultra preciseness doesn't work in the live markets unless you're trading with tiny size, and there's plenty liquidity. So something like NQ, where you have a lot of contracts and you're like trading with small size, you can be precise. I'm just warning you that ultra preciseness does not work in metals, especially not when this is happening, and especially not when you have gaps in the dome, and especially not when you don't have preferential fills, which is a service that hedge funds and institutions pay for, and they cost a lot of money. So if you don't have preferential fills in the live market, even if you're ultra precise, you will be put on the back at the back of the queue because you're retail. And then if you trade with slightly bigger size, like for example on micro copper here, bigger size will be considered 15 micros. You will have to wait, because all of the other guys who are trading with 1 and 2, they have preferential fills, because it goes by the size of the contracts. So this ultra preciseness, I've never heard of it before until we had online prop firms letting you trade in sim. It doesn't work. There's a reason why we've never heard it, because in the live markets you cannot be that precise. You will get slippage, you will get a spread, you will get crappy fills. So just be careful, okay? Just warning you as somebody who has live traded for 19 years, okay? Ultra preciseness, hyper scalping, the snipery entries just doesn't work. Doesn't work. It would work if you have millions, maybe even a billion, to have one of those servers that hedge funds use. But that maintenance of those servers, just the maintenance, costs like $5 million a year. And they have like entire rooms dedicated just for that. And then they pay for the preferential fills, and they pay for the direct access to the exchange, and a whole bunch of stuff that we don't have. That's how they can run HFTs, okay? But you trying to be super precise and being under the impression that you're doing pretty well, then somebody pushes into a live account and you try to do the same, you will be very, very annoyed that approach doesn't work. So I'm just telling you, don't be ultra precise, okay? There's no point. Because as the end goal, it doesn't work. D, how do you find the confidence to keep going once you've hit your daily profit target for a payout? I've just taken my second payout and find myself taking the money and running when I see it. I don't look at it that way, believe it or not. I don't look at my life and my payouts as, oh, it has to be now and I have to keep going and, I have to have confidence. To me, trading has nothing to do with money. I know it sounds weird and counterintuitive, but to me, it's about playing detective. And it's like, will today be the day when the probabilities that are statistically relevant for this time of day play out? I couldn't care less whether I make money from it or not. What I do care about is that my stop loss is at a good place and not at a round number, like 184, like 585 would be a terrible stop loss placement. Minus 585.25. I'm actually pretty happy with that. I care about the level that I'm using. What am I using? I'm using ADR high that we rotated to all the way from the bottom. So it means that statistically we should be reaching some sort of a top here, right? I care about the fact that I'm not overdoing it on the target. I'm only using 2R. I might take it off at 1.5. I don't know. I might take it off at scratch if this thing keeps dragging and annoys me. But I'm not looking at this going, ooh, so if I make this trade, how much am I going to make and how close? Okay, I need another day of payout. So 212, that'll be safe. I don't ever think about that P&L side of things, ever. I don't even look at my P&L. I'm like, oh, nice, there's some money there, cool. Was I right on the plan? That bothers me more. So even if I end up on the day and I didn't follow my plan, I will be more annoyed with myself that I didn't follow the plan, even though I'm up money. I'll be like, wow, that was that was prime muppetiness, and let's try and not repeat that. But you're like, oh, but I made money. I don't care. I made money the wrong way, because that won't work in the long run either. On the days when I'm completely calm and I'm following the time of day rule, I nearly always end up money. So, but to me, that's not the profit thing. To me, it's like, that's what works. So that's what I need to do. I'm not thinking, oh my God, payout. And I've never thought that, even when I only had my prop income as payouts. I never thought that. I always thought, how did I get here? Like, how did I follow the rules today or not? And ultimately, that's the only thing that you should care about. So to me, I don't understand when people are so up in arms. They're like, oh, fourth day, I just need one more day. No, you don't. You will have thousands and thousands of payouts, hopefully, in your career, only if you stop thinking about one day to pay out. And now pay out, now the cycle starts again. Stop it. Relax. It's just a cycle. No one cares, right? So once you get rid of that burden, it just becomes much easier to live. So focus on the process. Focus on the day by day, which doesn't have an end. You trading doesn't have an end. Hopefully. It's just day by day by day. So is it working? Is it not working? If you're wondering about confidence, that means you maybe don't have confidence in what you're doing. So that would be a thing to focus on, not whether you're up for a payout or not, and whether you keep going after a payout. Put that out of your head. Put all P&L related things outside of your head. Don't compare yourself to anyone. You do you. Okay? Do what works for you. Don't think about monetary side of things. Think about the process that led you there. If that's working, don't think about the P&L. Don't over-dramatize it. We over-dramatize losses, wins, glamorize wins, cry over losses. We need to stop that. Because ultimately, it's just P&L. It will go up and down. But overall, it needs to have positive expectancy. That's the only thing that matters. All right, we're going to finish it up here. Let me just see if I missed anything in chat. Trading Nickel says, most micros are plenty liquid. I trade nanos regularly on my personal account. Talk about where trading is less liquid. I know, right? Yeah. So, D, you seem to undermine my capabilities. It has nothing to do with your capabilities. I'm sure you can find a sniper entry. It's to do with the exchange fills and how things work in the live market. And that, from what I've seen in coaching and stuff, it seems to have crept up. In the industry, it's like, oh, I'm going to get, like you, 47, 47, 16. Even if you get the 16 part, it's not going to be 47, and it's probably going to be 25. They might even slip you all the way up to 50. See what I'm saying? So you placing your stop loss at like 47, 47, 16. The slippage is not your friend most times, okay? Yeah, so when I talk too much when I look too much at my P&L, I tend to lose it. Specifically, it's a big amount. Exactly. Why do you think I've got ticks instead of P&L? Because all of my accounts are then the same. Because if I'm staring at 13 ticks in this combine, I might also be staring at 13, 15, or 17 ticks in my bigger account. The positions are different, but everything else is the same. The level is the same. Entries are similar. Not the same, but they will be similar. It's the same setup, but it's a zone, right? So stop looking at the P&L. Give yourself a homework, actually, to not look at the P&L at all for like a week. You'll be surprised what positives it has, that approach has on your general well-being. Yeah, need money? Oh dear, that will not help you trade. Absolutely. You're better off starting an OnlyFans. Something. Because, but again, even that takes work. So I hear. All right, we're going to finish it here for real now. Thank you for joining me. Thank you for sharing your time with me. I really appreciate it. Click the like, click subscribe, press the notifications, and I will see you a little bit later. I'm Marcus D. This is the Eurotrade. Have a great day.